Okay, let's connect with Mr. Dinesh Thakkar, Chairman and Managing Director of Angel One, to understand that how the market has really impacted business, if at all. How does he see 2022 be different from 2021, and what is view on global valuation of some of these fintech and brokerage stocks is, because we've seen a bit of a shakeout at global level in some of the discount brokerage stocks. Mr. Thakkar, good afternoon. Thank you for joining us.
Good afternoon. Thank you. My pleasure.
We've seen a massive surge in Demat accounts. I look at your month-on-month data which you share with markets and with media about what has been the new client addition, client acquisition. Has anything changed in the month of December so far because of the market shakeout?
See, Nikunj, we declare we share our numbers uh, every month. So till last month, if you see that we have acquired, our client base has grown to around 73 lakh customer, which is a growth of around 150%. And every month we are acquiring around 4.5 lakh customers. That trend continues. There is no change in that. I am seeing that trajectory is continuing because of under-penetration and because of lots of customers are new to market who are coming from tier 2, tier 3. So for them, I don't think they get impacted by market cycles as much as urban population. So we are seeing that growth in this kind of like acquisition number is steady and it is growing, and in fact it is accelerating.
This is because post March 2020, we've only seen a solid and a raging bull market. It's only for the first time we've seen a sizable correction of about 10% on the index, 20% in mid and small cap stocks. But what you're telling us is that it has not impacted business and new customer acquisition.
Yeah, that is right. But if you look at like the market, like people believe that cyclicity impacts this broking business. But I was going through that past data, even in Lehman Brothers crisis also, our volume, that number of trades and number of contracts did not decline. It in fact grew by around 3%. So I think India's story is different than a global market where it is a saturated market. India, I think because of under-penetration, huge penetration in tier 2, tier 3, where actually people did not have access to this equity class, equity as an asset class. So I believe that this youth who have got access to this kind of like market through digital apps and all that are growing in a big number. So I'm not seeing impact in terms of client growth in customer base and in business that digital brokers are doing.
IPO market also added to your growth because the number of participants in IPO market at the retail level has increased, and to participate in IPO you need a Demat account. Do you think somewhere that is also helping the growth?
Yeah, you can take it this way that when it comes to acquiring customer, IPO market helps us. But IPO customers are not who would be very active in the market. They just acquire stock in IPO, and they are not as active as a trader in the market. But what we are seeing, one, the number of acquisition has grown because of IPOs. But second is that customers, what we had acquired a few months back, they are becoming like active, and they are trading in cash, future, FNO. So if I look at market share, growth in market share in terms of turnover and all that, it is growing proportionate to customers that we are acquiring due to like an IPO market or customer coming first time in the market. So there is a strong correlation between acquiring a customer and growth in turnover. For example, I will say that last month we were able to acquire 4.5 lakh customer, which was growth of around 150% year on year. And we did a number of order 57.2 million, which was growth of around 120%. So if you see customers that we are acquiring from any of this market are giving proportionate growth in kind of an turnover and revenue. So that's a very positive trend for digital brokers.
We've seen brokerage rates only go one side, down, down, and down. Have brokerage rates in the retail stroke, digital stroke, discount brokerage business which you represent, have they bottomed out?
I feel so, because if you look at brokerage that a discount broking house or a digital brokers charge now, it is just fraction of government levies, taxes, and all that. So most of this charge goes into kind of like government levies, exchange turnover charges, and all that. So I feel in that sense, customer is not looking for discount or a price reduction from brokerage houses. If you look at past years trend, few organizations tried to reduce the brokerage per order, but they were unable to get substantial benefit. People who got benefit, who invested in technology, platform, apps, and marketing and branding, that is more important for customer to have an access to this market, have an app which is simple to use. That is more important now than the pricing.
Is there a way in which you can share the basic split with us, that how much of your business is coming from customers who are more than 2 years old? I'm trying to understand that if we can make a sense of the pre-COVID customer and the post-COVID customer, who is more profitable for you?
Okay, I would not be able to share that cut because we give that cut in our quarterly presentation, but currently I'm unable to recall it. But I can say you one thing in terms of revenue or maybe how profitable these customers are pre-COVID and post-COVID. See, pre-COVID cost of acquisition was very high because customers were coming from tier one urban, and when after post-COVID, and I would give credit to even digitization of India, uh, app becoming very simple, we were able to see customer growth at a higher rate. Because of that, we were able to bring down our cost of acquisition. So if I compare pre-COVID, we were actually to acquire a customer and to achieve a break-even period used to be around 9 to 10 months. Today, when we acquire customer, our break-even is around 5 months or 5.5 months.
Okay. But have you reached that point also? While brokerage rates may not come down, but you will not be able to bring your cost synergies lower, because the digitization of most of the network has already happened. The sub brokers have moved to digital platform, so that one time cost saving which you got may not happen now.
Now look at it this way, that all digital platform, technology platform will have an operating kind of like leverage once they reach the scale. After scale, what happens? We can expand our margin because cost of acquisition remains constant and cost of service is almost negligible when we have a scale. But what we are doing, we are investing lots of money on future technologies. We are investing lots of money to gain market share. If we stop all that, our margins are going to expand. Reason is that cost of acquisition is same and revenue that we are getting for a customer is almost constant. So service cost reduces after every kind of like expansion that we do in our customer base. So currently we are not looking at expanding the margin. We are looking at gaining market share. We are looking at giving latest technology for next 2-3 years. So lots of cost is going, which is upfronted in nature in building technology platform, which may generate revenue after say 4 or 6 quarters. We are putting in lots of money in acquiring customer. When you acquire a customer, again, as I said, that cost is upfronted. We book our that cost immediately in that quarter, but revenue we get in next 5 years. So there is a good scope of expanding margin, but as we have always publicly declared, we are happy with this operating margin of 50%. We would not be focusing on expanding this market margin, but we will be more focused on expanding our market share and investing on latest technologies.
Which end of the market is growing for you? I mean, is it the F&O market? Is it the delivery market? Is it intraday? They all are different segments, but ultimately the spread which you enjoy with F&O versus intraday versus delivery are all different.
Intuitively, it appears that a delivery customer would be less profitable. But what we have seen our journey, a customer that we acquire who starts as in delivery, eventually goes in and tries all the segment. Please keep in mind that customers that we are acquiring, almost 75% are new to the market. So when they're new to market, they would like to try all the products that we offer, including even commodity market. So what we have seen, customers start their journey with suppose future and option, but then tries cash market, delivery market, intraday market. So to answer your question, that whenever we acquire a customer, already we see the broad kind of like services are consumed by the same customer. But primarily, I have seen customer sticks with F&O segment. So that is where he gets good leverage. And there are lots of kind of tools available where they can back test. There are weekly contracts available. It's a very liquid market and very attractive market for youth who is new to the customer.
You see a stock price of Robinhood, which in a sense is the cult poster boy of the discount brokerage market, at least in the pandemic era, cracked by 70%, 75%. Does that bother you?
No, because if you look at the valuation, what he had got on listing day, it is quite huge. So for them to really sustain that growth would be difficult. One, because that is a kind of a saturated market where penetration of Demat account is more than 35-40%. So to sustain that kind of valuation, he has to grow at a very higher rate, which was difficult, I think so. So let us not compare valuation of Indian brokerage houses and Robinhood and XP. Their valuations are far ahead than time. So I believe lots of like kind of digital kind of like businesses, VC funded kind of like valuations are, I think, are really inflated. So if you compare VC funded valuation versus listed peers, I think there's a big bridge which has to be, there's a big gap which has to be bridged. I think time has come, people realize that when they hear about valuation of a VC funded kind of like organization, that is far ahead of time.
Why is that? You know, it's strange. और हमारे साथ हमारे हिंदी नाव ईटी नाव के स्वदेश के दर्शक भी जुड़ रहे हैं. तो दिनेश जी, पहली बार शायद हुआ है कि प्राइवेट मार्केट की वैल्यूएशंस लिस्टेड मार्केट की वैल्यूएशन से ज़्यादा है. हमेशा उल्टा होता था. आप लिस्टेड मार्केट में आते थे बिकॉज आप रिस्क लेते थे तो आपको वैल्यूएशन अट्रैक्टिव मिलती थी. अगर मैं आपकी वैल्यूएशन, आप एक लिस्टेड कंपनी है और अगर दूसरी जो अनलिस्टेड कंपनीज हैं, काफ़ी सारी कंपनीज हैं, मैं नाम में नहीं जाना चाहूँगा पर हमारे दर्शक को इशारा मिल जाएगा, उनकी वैल्यूएशंस एंजल की वैल्यूएशन से ज़्यादा है.
Now, if you look at it, if you look at their turnover, if you look at their revenue, people who are privy to their kind of like information about their numbers, they are almost half of what we are. But VC funded, like they have a private circle where they are able to like have a kind of like vision about next 10 years, what they're going to achieve. The listed company, what happens? We are declaring our numbers quarter on quarter. So we can't disclose what we are going to achieve in 7 years and 10 years. So one reason is because of that. So they are privy to that kind of like model of 10 years and they see some kind of a big growth. They are ready to invest for next 5 years, 7 years. So comparing listed company with that VC funded now is really, I would say, futile. But if VC funded company is going to come in public market in a year or two, this gap is going to get bridged. So I'm not sure how it is going to. We all know what valuations other VC funded brokerage houses are getting. When we compare it to kind of like listed peers, there's a big gap. Ultimately, it has to bridge. That is what I believe. Right? Because I don't find any big difference between a technology platform of listed companies or VC funded houses.
दिनेश जी, आखिरी 2-3 सवाल.
Sure.
अगर हम देखें कि जो स्मॉल टियर सिटीज़ से ग्रोथ आ रही है, मैं एनएससी का डेटा देख रहा था, नागालैंड से डीमैट अकाउंट खुल रहे हैं, अरुणाचल से डीमैट अकाउंट खुल रहे हैं, छोटे छोटे शहर्स वेयर वी स्ट्रगल टू फाइंड देम ऑन द मैप ऑफ इंडिया, वहाँ पे डीमैट अकाउंट्स खुल रहे हैं. इज़ दैट योर एक्सपीरियंस ऑल्सो दैट यू एडिंग डीमैट अकाउंट्स नॉट फ्रॉम दिल्ली, मुंबई, कोलकाता, सूरत, इंदौर और जयपुर?
Let me put it this way. This growth, what we are seeing since last 2-3 years, it has happened because of tier 2, tier 3 and pin codes, what you are referring to. So it is first time this population is getting access to this market. और ये जो अकाउंट खुल रहे हैं ना, वो यूथ है, नया बिजनेस चालू किया है, फर्स्ट जॉब मिला है, अब सेविंग कहाँ पे लगानी है. दे आर नॉट फॉर्चुनेट इनफ कि बैंक में जाके उनको 8-9% रिस्क फ्री एसेट पे रिटर्न मिले. So, and being educated, more educated than their previous generation and having access to social media, they can see how people, experts have gained wealth, how they have created good money from stock market. So they are attracted towards stock market to learn and to really start investing, start trading. So what we are seeing is that this huge under-penetration in this population of 75%, I would say, who are into tier 2, tier 3, beyond and pin codes which never heard, they don't have a branch office of a broker or an even bank, but they are very well versed with social media. They are very well versed with how to use mobile apps. So this is creating a surge of population, cream population from the tier 2, tier 3 and this versus an average population of urban and tier 1. So if you look at ticket size of urban and tier 1, there's an average what we are looking at. But we are looking cream crowd who are coming from this pin code, who have surplus kind of like funds to put in our market. Their ticket size is almost same as urban and tier 1. But if you look at under penetration over there in that pocket, their penetration is just almost less than 1% compared to urban and tier 1, which is 8 to 9%. And if you look at China and Korea, their penetration is around 12 to 13%. So what has happened in this market, because of inflation coming down, interest rate coming down, and youth getting kind of first salary, first saving, this market has exploded. Youth wants to come and invest in this market. And when they have started investing, believe me, they are going to invest for next 30 years. So they are very young.
तो आखिरी सवाल, अब जब मेरा आपसे इंटरेक्शन चालू हुआ था तो उस समय एंजल इंडिया का सबसे बड़ा ब्रोकर था, अभी भी बहुत बड़ा ब्रोकर है, नंबर ऑफ अकाउंट्स में अभी भी सबसे बड़ा है, बट दैट टाइम योर मॉडल वाज सब ब्रोकर बेस्ड, आप सब ब्रोकर्स थे आपके, आप रीच और डिस्ट्रीब्यूशन पे फोकस कर रहे थे, तो उस मॉडल का क्या होगा? और दूसरा उसी से जुड़ा हुआ सवाल है कि जो सब ब्रोकर्स हैं, जो छोटे छोटे ब्रोकर्स हैं, ऐसा नहीं इंडिया में नहीं है, अभी भी हैं, उनका भविष्य क्या है?
फर्स्ट ऑफ ऑल, सब ब्रोकर मार्केट वुड बी रिक्वायर्ड. आप इंडिया में देखोगे बहुत सारे लोग टेक्नोलॉजी से बिल्कुल कंफर्टेबल नहीं है. उनको एक रिलेशनशिप पर्सन चाहिए जो हैंड होल्ड करे, जो उनको समझाए मार्केट. और दूसरा एक ग्रुप है, यंग ग्रुप, दे वांट टू गो डिजिटल, सो स्ट्रेट अवे वो डिजिटली जर्नी स्टार्ट करते हैं. तो ग्रोथ इन दैट सब ब्रोकर मार्केट इज ऑल्सो क्वाइट ह्यूज, एंड it can be a CAGR of 15-20%. But if you look at digital market, their growth is a CAGR of 100%, 120%. So that is hugely underpenetrated. Now, if you look at our model, why we started sub-broking? Because we knew that we can open offices in urban tier 1. But when we have to cater to kind of like pocket beyond that, it is not profitable for us to open a huge office. So just to give an access to these people, we started the sub-broking model, which is very successful and which is very needed. But now if you look at digital natives, now we have to go far beyond that pockets where even a sub-broker will be profitable. Plus we have to give a cost advantage to these people. So these people are ready to come through a mobile app. So to increase our reach, as I said, this market is all about giving access to people. It is not about making any kind of like fancy features. Can you build an app which a person in a pin code, which is not even, we don't even know, if he logs in on an app, he would be able to have a market access to market uptime of 99.99%. That is what we are aiming at. That's the reason digital brokerages who have been able to achieve that success in building app and building a kind of an uptime, what I'm talking about, they have seen a huge surge of clients coming in, because there is a trust factor that when they start their app, when they have an access to market, it will be on for that 5 to 6 hours of market hours.
Thank you so much, Dinesh, sir, for taking out time for us, telling us what's the way ahead for this business, which has been growing leaps and bounces, and of course being on the forefront of the digital side of the market.